Okay, and welcome to day 3 of the Master Your Trading Mindset movement. If you're just checking into this as the first video, over the next 30 days throughout December, I'm doing a video a day helping each and every single one of you master your trading mindset. I wanted to start this movement because I'm afraid a lot of people don't put the emphasis that's required on their mindset to be successful traders. They neglect the most important part of the game. So over this time, I really want you to check in every day to the channel, subscribe, turn the notification bell on, watch the videos I put out, implement the principles I teach, implement the tools I teach as well, and you will see a huge transformation in your mindset this side of the year. 2023 is just around the corner, so putting an emphasis on your psychology now, empowering that area of your life will ensure that 2023 is your most successful year yet. And you have the greatest success with funded accounts, with scaling your trading, etc., etc. Now, I would love for you guys to share these videos with friends that you think will find these valuable. Share them on your social media, tag the Master Your Trading Mindset Instagram page, share them in your trading communities. Let's get as many people as we can involved in this movement and putting that emphasis on trading mindset. But in today's video, we're going to be talking all about fear of missing out. Now, in all probability, you have taken losses because of FOMO. You've taken unnecessary trades, unnecessary losses because of the fear of missing out on certain positions. So in this particular trading psychology lecture, I wanted to break down what FOMO actually is and how we can identify it, how we can put things in place to never experience FOMO again. Because once you understand what it is, once you understand what drives FOMO, you can put things in place both on a psychological level and a structural level to ensure that you've got things in place to manage and deal with FOMO. So let's get into that. Now, the big problem here that I really want to bring to surface here, again, having an awareness of what FOMO is then allows you to be aware of it and put things in place to mitigate it. So the question we're asking here is, what drives FOMO? Where does that come from? And the simple answer is FOMO, my explanation or my definition of FOMO is fear of missing out on the positive expectations of the outcome. So FOMO is fear of missing out, but I wanted to go a little bit deeper. What are you actually fearing missing out in the market? And the truth is, it's nothing tangible. It's all about the expectations that you create in your mind about what you perceive you're going to miss out on. Let me elaborate on this a little bit more because it's so crucial. You've got your virtual market, which is the market in your head. This is where you create the expectations. This is where you create the fantasies of what you think is going to happen next in the market. Then you've got the real market. Nobody knows what's going to happen next in the real market. The real market just does what the real market wants to do. If you want to be a successful trader, you have to listen to what the real market's communicating to you, and you have to execute on the real market when it gives you cues and signs that it's moving in a certain direction that you know you have an edge in your trading plan. Now, you can't listen to the real market if in the virtual market you're creating ideas, expectations, fantasies, and projecting those onto the real market. Because then we have what is called confirmation bias, to only let in information that supports our expectations or fantasies, and we block out important information from the real market. So when we're talking about FOMO, FOMO is the fear of missing out on the positive expectations, the fantasies, the ideas, the beliefs we create about what we think is going to happen next in the market. So let's say, for example, we're watching euro dollar and we're thinking that it's going to go short and it's going to go to the downside. And in our mind, we create this idea, this expectation that euro dollar is going to move to the downside. And I'm going to take a position on it, and that's what's going to help me pass my funded challenge. That's going to make me a certain amount of money. That's going to make me a certain amount of percentage. That's going to make me and create all this glory for me in the community I'm in. Now, we fear missing out on those expectations that we just created. We fear missing out on the funded account, the glory from the community, the percentage, the money we think we're going to make from the market. So FOMO is the fear of missing out on the expectations that we create. We have complete control over that. If we learn to ground our expectations in the outcome and put things in place to mitigate those, we simultaneously mitigate FOMO. And this is really the solution I teach in the 12-week program, help all my traders get to, is that, like I'm going to mention next, FOMO happens simultaneously with unrealistic expectations of the outcome. Because the moment we create an expectation on the outcome that's positive, we create the fear of missing out on that simultaneously. So FOMO is that And once you have this understanding, I'm going to show you what to do next to mitigate it. Okay, so this is really key, and I don't think enough traders understand this, that the fear of missing out comes simultaneously into the mind. It happens at the exact same moment that we create a positive expectation of an outcome of a position. That happens simultaneously. We surface the positive expectation of what we think is going to happen next. I'm going to pass my funded account, for example. And as a result, FOMO arises simultaneously because we now fear missing out on that positive thing. So you learn to ground the positive, unrealistic expectations in the outcome. You learn to focus on your process because you've got a clear trading plan, you've got a clear edge, and all of a sudden FOMO doesn't exist anymore because there's nothing to fear missing out on. All you do is consistently execute on your trading plan without an expectation on the outcome. You approximate your edge over a large sample space. That's what it's all about. So when we talk about solutions for FOMO, I really want you guys to take these on board, implement them, put them in your trading plan, do whatever you need to do to ensure that you're implementing these two solutions. The first one's going to be psychological for your mindset. The next one's going to be structural. Both are important. So setting and projecting unrealistic expectations of the outcome onto the market will keep you in the cycle of FOMO. It will keep you fearing missing out on the very unrealistic positive expectations of the outcome that we create in our mind, in the virtual market, in our mind. And we have full control over that. That's a really key thing to understand, that we are in control of the FOMO we experience in our market. It's not a random thing. It's a very specific thing that we fear missing out on, which is the expectations and the outcome. It's crucial to identify and ground these unrealistic expectations and the outcome. And I've created the free Bulletproof Your Mindset tool to help you do that. Make sure if you haven't already got a copy of that, go into the description, grab a copy of that, watch the theory lessons, watch the video walkthrough, and start using that tool before every single trade you take. And what that's going to help you do is it's going to help you, before you take a position, have an awareness of, okay, what expectations do I have of this position? And am I making a decision because of these expectations of what I think is going to happen next? Or am I taking this position because it aligns with my trading plan? Now, if it's the former, the tool's also going to help you ground and build up this self-awareness of what type of expectations you create and what type of decisions you're making. And this is going to help you build self-awareness in the moment. So when you become aware of the fact that you're taking a trade because of an expectation on the outcome, you now have more power with that awareness to ground that unrealistic expectation, bring yourself back, and realize that, you know what, this is not profitable. This is not an edge right here. I'm trading based on what I think, based on how I feel. I'm not trading a proven edge. So you're going to learn to build self-awareness to ground these unrealistic expectations. And simultaneously, the moment you do, when you don't have positive expectations in the outcome, you now mitigate FOMO. FOMO isn't there because you have nothing to fear missing out on. And it becomes less of, this is what I think the outcome is going to be, and I want to take that position because of that outcome, and I fear missing out on that outcome, to, I'm just executing this position because it aligns to my trading plan. On this individual trade, I don't care if I win or lose. I'm focused on the larger sample space. I'm focused on 100 trades, on 1,000 trades, because I know if I execute on that many trades, I'm going to approximate my edge, which is my trading plan. And that's the key thing. Now, I hope that makes sense with the psychological solution. If you haven't already got the Bulletproof Your Mindset tool, it's going to help facilitate that process. So make sure you go into the description, download it, use it before every single trade, and watch the FOMO disappear if you use it properly and you build up that self-awareness. Okay, the second thing you want to implement here with your trading plan is a structural solution. So we've talked about the psychological solution. That's probably going to take care of 90% of the FOMO. But it's also important to have a clear system, a clear trading plan that's step-by-step, that lowers the probability of you taking an impulsive trade out of FOMO because you've got such a strict system of a step-by-step process, and there's no discretion involved. It's a mechanical system. And you want to have a clear step-by-step process-based trading plan. It's just so crucial. It needs to be mechanical, it needs to be step-by-step, it needs to be clearly laid out. And what I encourage traders to do for their entries to break it up is you want to have a look at, all right, what is the area of value I look for in the higher time frames, right? Maybe it's the daily, maybe it's the 4 hour, depending on what type of strategy you trade. But what's the area of value you would love to take a position in, has an edge there? And then you go down to the lower time frame and you ask, what are the few indications you need to see from the market on the lower time frame as an entry criteria? So what are the 1, 2, 3, 4, 5, maybe 6 things that you look for in the lower time frames as an entry criteria that, all right, we're in a great area of value. Now I have a very step-by-step checklist of what I look for in the lower time frames to know that, great, that's an entry I'm going to take. And what happens when you create something that's very step-by-step, very mechanical, is you lower the probability of taking trades out of FOMO. You lower the probability of making emotional, irrational decisions as a trader. Okay, so these are 2 really important things to implement. And a little bit of a summary here. The first thing is FOMO arises simultaneously with the unrealistic positive expectations we create on the outcome. It's really key to understand. That's where FOMO comes from, because it's the fear of missing out on those expectations. So the first thing here is a psychological solution. You want to identify and ground the unrealistic outcome-based expectations you create in the market. Use the bulletproof mindset tool. That's a game changer right there. And then the second thing here is you want to have a clear trading plan, especially a clear entry criteria, especially a clear checklist, step by step. I know some great traders who even have a checklist they printed out and they have it right there in front of them, so they know exactly the few things they're looking for before they put risk on in the market. Okay, so keep these things in mind. If you're experiencing FOMO in the market, make sure you go off and implement these things. Have them in place, and I guarantee you're going to mitigate FOMO to a large degree, if not altogether. And if you resonate with this particular lecture, make sure you check out the free 7-day trial to the 12-week program. That program is an absolute mind blower in terms of the things you'll learn for your mastering your trading mindset. But if you enjoyed this video, share it with friends, share it on your social media, tag Master Your Trading Mindset on Instagram, share it in your trading communities, and make sure you tune in for tomorrow's video, day 4. We're going to be sharing some more insights to help you master your trading mindset. But I'll speak to you all very soon.